Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, February 20th, 2019 at 5:45 p.m. Central Standard Time, which means the boards behind me are accurate as I'm recording, and this is actually the data for February 21st, Thursday. Got it? And that's because we're very late tonight. We're working on some projects. To make a long story short, there's two events that the market was looking very forward to this week, especially. The first event was the FOMC minutes. They came out. And in the minutes, the Fed called for patience to determine future rate moves. They're going to come up with a plan to stop the portfolio runoff. The near-term policy is dependent on incoming data, blah, blah, blah. They see moderated growth. They only see interest rates rising if inflation exceeds expectations. So very much in line with what the market was looking for. It does not mean that a rate hike is off the table, but it also means there's probably not going to be one before June. The second elephant in the room are the Chinese trade talks, which begin tomorrow and are due to wrap up on Friday. Will we get anything out of those? That's what the market's going to be looking at in a big way. Tonight, after a good rally during the day, the market is setting back. Metals are giving up quite a bit tonight early on. Now, it depends what you call quite a bit. It's about $500–600 in the gold and the silver. And foreign currencies, we have something of a mixed bag going on. So as we take a look at the S&P, you can see for the week, the market is up 8.75 points. Not dramatic, but another up week. What is more important is out of the last 8 days or so, you've had gain after gain. I think there's one day where you didn't have a gain in the S&P. And we're into what I call that resistance zone right through here. We saw it before up here, here, and here. That does not mean this bull market is over. It means you're in a resistance zone. As you take a look at the pattern, you've got higher lows, higher highs. That's bullish unless the market takes out to break this pattern, 27.29. You had a bullish crossover where the 18-day moving average of closes got over the 100. That's something that a lot of chart analysts look at, and the market did make a new high after that. In terms of resistance, I don't know what more to say other than I have been saying that the resistance zone is the combination of the 200-day average and the upper Bollinger Band. You haven't yet hit that upper Bollinger Band, nor do you have to, but you're in that resistance area formed by that. What was resistance, the 200-day, when you played around it for a few days, on the way down might prove to be some support. In terms of momentum, it is bullish because you've taken the slow stochastic reading, and instead of both numbers that make it up going sideways under 80 or over 20 or just breaking up and down between there, they elected to go sideways over 80 and stay that way. Until the red line closes back under 80, I say the market stays bullish right here in terms of momentum. In terms of the NASDAQ, as you can see, you have not been able to get over this 200-day average. Here, too, you have the bullish embedded reading. The market tonight down a little bit, support the 18-day average. The last break low over here is what I look at, one of them, and that number was 69.72. So here you are with the market at 70.68. That's quite a drop that would have to get under that number. And, of course, along the way, if you do that, the 100-day average is waiting. Could you step out of the uptrend? Absolutely. You've got to wait and see what it's going to do. But no matter what happens with price, until momentum turns down, you can get price to break. That doesn't mean momentum's going to give it up. The same in the Dow. You can see day after day of gains. Market riding, what I call riding, the upper Bollinger Band. It's one of those situations where you hit it, sometimes you close over it, you pull back under it, and the market sort of hugs that. That is still a bullish situation. You had a bullish crossover right here where the 18 got over the 100. The market has stayed up. The Russell is clawing its way towards the 200-day average of closes. It has been the strongest on a technical basis of all the markets and stock indices that I watch because the slow stochastic back here at the beginning of February embedded, and it hasn't given up any ground. In terms of the VIX, it reminds me of years ago. This market just keeps falling. Nobody's worried about the current events. And when they're not worrying about it, the market drops here as they don't need protection. That's the concept. In the bond market, I see an overbought market that got up and is staying within tight Bollinger Bands in an uptrend. You'd have to break through this low to take that out. Supports in front of that at the 146.4 level. I don't know that you're going to get a lot of people stepping in an overbought market. You don't quite have that situation in the 10-year note. You have the pattern of higher lows, higher highs. You have not hit the upper Bollinger Band. Momentum is just plain flat. So I'll say that the bias is up because you're over the 18-day average. The trend is up. Momentum not giving us a hint. In terms of TLT, the market didn't do very much after seeing the Fed notes, as you can see. It's just staying overbought. It has hit 2 times recently, in fact 3 times the upper Bollinger Band, and hasn't been able to mount anything from there. So the question is, if you take out this last break low of 121.54, what does that do to the market? And that will step it out of the uptrend. So I'd be watching that. In terms of the dollar index, when we had lost the embedded reading right through here, watch this 81 reading give ground. That often leads to price in the 18-day average making a run at each other, and you can see that they've certainly done that. In the eurocurrency, this rally's been nice, but it's not able to get yet over that 18-day average of closes. The British pound's had a heck of a rally off these lows. We're waiting to get more information. It appears that there is movement between the EU and the UK on definitions of the Irish border. Now, if we can get movement on that, a Brexit could happen. That is not a hard Brexit. We'll see what happens there. In terms of the yen, you've gone down into support at the 90.32.5 area. It's still in the bear camp because you have the embedded readings, which tells me on rallies until that's lost, you probably will witness selling. Lose the red line, get it over 20, and then I'll say that maybe price and the 18-day average can make a run at each other. Bitcoin still acts to me like a market that is bottomed out here. Can't tell you how high it'll go or any of that, but as a chartist, I can tell you that it's not in the bear camp. Is it in a bull camp? Well, it's got a lower low, higher high. It's got now a couple of days over the upper Bollinger Band. I expect this to be resistance, but you broke out of this sideways pattern, and that gives it a bit of life, in my opinion. In Brent versus WTI crude, you're starting to narrow in a bit, not a lot. You got out as wide as $10.27. That means that Brent was $10.27 a barrel over WTI. You can see how you're pulling back. The API numbers today came out with a 1 million barrel build out of the API. They're looking tomorrow for about a 2 million build in the EIA. We'll see what that does. You're in a serious resistance zone. You do have an embedded reading, which even on breaks tells me this market could be well supported. You have the resistance in WTI right here, the 100-day average, the upper Bollinger Band. Unlike Brent, this market is just plain overbought. I think the smart money is taking money off the table. Doesn't mean I'm right on my analysis, but that's what I'm expecting. I see the same thing in gasoline as you come up to the 100-day average, the upper Bollinger Band. Is this market embedded? Well, let's take a look. Both numbers as of, and I don't want to take Thursday, I want to take Wednesday's close right here. Both numbers over 80, both over 80, not over 80 the day before. So while tonight I'm showing you Thursday action, you got to be able to stay at these numbers to embed, and you're at the resistance point, and you went up to what I call that line in the sand in natural gas and just ran out of steam completely. We'll see what that all does for the market, but it's trying to just figure out what to do from that 18-day average of closes. One of the popular things that we teach are trading tools, and one of the very popular ones are pivot points. Now, I look at them, honestly, pivot points a lot during the day. As I write my updates, it's one of the tools I look at to see where my Bollinger Bands are and other numbers. Is this fitting in? It gives me an idea of 2 resistance points. As I set it up, there'll actually be 2 support points with a center line. I match that all up with momentum intraday to just give me, where am I in these markets? Am I going to get closer to my actual number that I want to come out of a market on? Or is the market that's going against me likely that this is an area where it can get even stronger on me and I better be careful? I could be very wrong. So I use it that way. It's something you might want to look. A lot of people use it as day trade tools. To get this, you can either call us, go to our website. You'll see our list of free offers. You'll have the pivot points and the Arun indicator there. You can always click up here to get right to that as well. I'm Ira Epstein. Have a great night.